watching famous Dave on YouTube.
Good morning and welcome back to the show. My name is David Lincoln, and you are watching the Short Vol Show live, broadcasting to you live from Cape Cod, Massachusetts, home of the Pilgrims. And I woke up this morning to a phone call from TDAmeritrade risk management desk. Indeed, when I went to sleep yesterday, my position had me with several $100s in buying power. And when I woke up this morning, it said that my buying power is now negative $57,000. So let's dig into this a little deeper and see what happened here. All right, so let's take a look at the screen here. So what happened that caused me to have negative $57,000 in buying power? And let me kind of close up on the screen here so you can see this here. Let's try to move this over. So I sold a couple naked calls, and it's weird because when I sold them, it didn't show on the screen. It showed them, costing some buying power, but not the amount, this incredible amount that's on the screen here. But when I woke up this morning, it showed this amount. And I think what it is that GameStop has specific extra margin requirements that somehow were not calculating on the screen yesterday when I put this position on. But let's take a look at this position really quick. I'm basically short 3 naked calls, and TDAmeritrade, I saw them calling me, and I knew exactly what they were going to say right away. They were going to say, we don't like this risk, cover your position. And when you have a risk desk, essentially TDAmeritrade is essentially the clearing firm, or they represent the clearing firm. So when they tell me to cover something, then I must cover it. So I told them, I said, I know what you're going to say. You're going to say you don't like the naked calls, and I need to cover them. And I said, I will cover them on the open. So that being said, let's take a look at the position. It's not as risky as, which I tried to explain to the guy, but he either didn't know or didn't care, and it really doesn't matter. But I don't have as risky a position as might appear from this. Look, it shows stock buying power negative $190,000. Anyway, so position Greeks here, short 59 delta. So yesterday, just as a side note, I did buy some out of the money put spreads, way out of the money put spreads out in January in GME, which is not a very risky. Yes, it shows a delta of short 60, but it's not a super risky position. These put spreads are not going to move that much, even if the stock goes up $100. Okay, so the calls I'm short are the 690 calls, right? Stock right now is 212. The 690 calls. So for these to be in the money, the stock would have to triple. However, they could go up in price a lot if the stock were to rally. But let me just defend myself a little bit here. If we take a look at the position here, and these Greeks are not correct because there's something in here that's not in my position. Let's pull this up and take a look at this. So the first message here is when you get a call from the risk desk, don't panic. So let's see what is funky here. Oh, here it is. Stock is not 135. Okay, so up 10%, you can see up 10%, I lose $1,000, right? Down 10%, I make $1,000. Okay, up 50%. Now, certainly the stock could move up 50%. It's done so in the past, right? That's certainly possible. However, it's less likely for it to move up 50% when it's trading $200 than when it was trading $30, right? Up 50%, I lose $6,000, so roughly a little under half of the account, right? Bad, but not like super risky, right? Not like that would be bad to lose, right? But it would take the stock going up 100%, right, for me to lose the money in my account. So for me to like owe TDAmeritrade money, for them to be on the hook for anything, the stock would have to go above $440 like overnight. right? So it's not inherently a very risky position. I guess it really depends on your tolerance for risk. But from my point of view, if the stock has to go to 414 for me to blow out the account, then it's not all that risky, right? So there you have it. But they want me to cover. So, and look, it shows if the stock were to go to 450, it's showing my buying power there at negative $300,000. So these numbers are kind of like way out there in outer space. But it basically what this shows is that to actually put on positions where, you have naked options in a volatile stock like this, you really need to have portfolio management. And what portfolio management is an account size of, let's say, over like 150, 200 grand, where the rules are a little bit more relaxed, right? And A, and B, if I had an account that was over 200 grand, then negative 65,000 in buying power wouldn't be the end of the world. But here, it kind of is the end of the world because the account size is much smaller. But it is unfortunate because I like the sale of these calls. 17 days to go. There's the 690 calls at $2. So I sold some for $2.10 yesterday. I think the average price was around $2 and a penny though, because I sold some at $1.94. I saw one at $1.94, one at $2.11, and one at $2.01 or something like that. And the way you can look up, by the way, to look up where you traded something, if I go down below here, and I'll get out of the way just briefly here, but if I go on the screen down below and I pick the option, if I right-click on it and select View Trades, I can see what price I traded these at. So you can see right here, I sold one at $1.91, one at $2, and one at $2.11. They went out at $1.81, so I'd already made some money on them yesterday. Stock is up. Looks like it's going to maybe open up a point or two, but I still should be able to buy these back and make a profit on them. The strange thing to me is, if this is such a huge amount of buying power that it takes to sell these, then why did TDAmeritrade let me sell them yesterday in the first place? And I'm not by any means taking away responsibility from myself with my trading account when I say that. I am aware of the risk of selling these naked calls, and I understand the risk I was taking at the time, and I was comfortable with that risk. Now, I would challenge you as the viewer to educate yourself so that you can be comfortable with whatever risk you're taking. And this should be a word of caution that your brokerage is not going to protect you from risk, right? There's a possibility of you to risk not only all the money in your account, but more than that, and end up owing them a lot of money based on your trades. The margin requirements are not going to completely protect you, so you need to be aware of what's going on. Now, for me, I liked the risk. I was comfortable with this risk. The 680 call. If the stock goes up $100, these calls are still not going to move that far. So let's see, up $100. So that would be 311. Let's see how much of a percent move that is. I'm just clicking through on my percent move tab. So that would be up $100 would be a 46% move, 47% move up, and it shows me losing half of the money in my account. However, remember, and look, the theta all of a sudden goes up to 349 a day. So if it were to make that move up there, it would show me losing $6,000 on paper. However, meanwhile, these calls are still way out of the money, right? And so if stock sat at that 312 area, or moved lower or moved slowly higher, those calls are still way out of the money and would likely still end up going out worthless, right? So the risk here is not huge, and that's why I have the trade on. But once again, if the if TDAmeritrade doesn't like the risk I'm taking, then it's their prerogative to tell me to cover it. We went into this a little bit with Robinhood, and when people were getting upset with Robinhood for not allowing them to sell naked sell stocks. It's up to when you sign the paperwork that has to do with getting a brokerage account. You sign away your rights. It says in that paperwork they can do whatever they want to protect their interests with your account, and they can force you to cover. So, it's a very simple call when they call me up, and I had this happen one time before, where they said you need to cover naked calls, and having the risk desk on your back it's not like the sign of like a bad trader. In fact, as a market maker, the risk desk is always on your back in some way or another because you're in the business of taking risks. That's the whole point. So, it's not like I'm being punished getting a call from the risk desk, right? It's part of the of doing business, and I've made the case many times before that you should have a relationship with more than one brokerage. That way, if a relationship goes south with one brokerage, you can you have another option. Now, I have never blown out an account with a brokerage. I've never owed a brokerage money. I'm not like irresponsible. I've never declared bankruptcy personally, and not that I'm frowning on people that have. People for various reasons in life declare bankruptcy, and that's just it's a thing. It is. I'm just saying, for myself, as far as being responsible and having a responsible business relationship with brokerages, I followed that, and I'm not like a bad customer to have. Once again, people call me, they want me to cover the risk. I don't think I have too much risk on, but it's their brokerage account. Essentially, it's their brokerage in the end. So if they don't like it, then I'll cover it. It's just kind of bizarre that like it doesn't, as far as I knew yesterday when I went to sleep, I had an appropriate amount of risk on from their rules, but I wake up in the morning and all of a sudden it seems like they've just turned on this additional level of buying power protection for themselves in the middle of the night or something, because it wasn't there. It wasn't there yesterday, right? You can see here negative. If these rules were in place when it wouldn't have allowed me to put this position on, right? When I sold the first call out of these 3 calls, let's take a look at. We've got 4 minutes till the open, but let's take a look at what kind of buying power it's expecting to sell just one of these calls. So if I were to go to GameStop and model selling just one call here, so what I'm going to do is just go to the call, click on the bid, and then I'm going to right click and I'm going to hit Analyze Trade. Now I'm going to clear out all the other options in the Analyze tab except for that one. So it was saying that I needed $21,000 in buying power to sell one naked call. So obviously that requirement was not in place yesterday because it wouldn't have allowed me to sell 3 calls, right? It wouldn't even allow me to sell one. So obviously that's the frustrating thing to me, is that they kind of changed the rules in the middle of the game, right? That's not fun. And that's something that's frustrating. I understand their point of view, and I can accept it. It's just frustrating that the rules kind of got changed mid-game. And you see that with TDAmeritrade's. You see that with the modeling on this program. Sometimes it's off. For example, yesterday it showed me like it said like P&L open. This P&L open number. Sometimes that's really off. It showed me like negative $7,000 P&L open, and I certainly hadn't lost $7,000 on the position. It was just getting some funky data. And sometimes when you see these numbers, like I wouldn't be surprised if once the open happens, if I logged in and logged back out again, it would, if this number wasn't something completely different, because that happens all the time. I did make a verbal agreement that I would cover the 3 naked calls that I'm short by 1 o'clock, so I will do that. regardless of what the screen says or anything. My word over the phone with a risk manager is my word, and I stick to my word. So that's what's going on in my part of the world here. I do like the idea of buying way out of the money puts in here, because I do think there is a good chance that at some point the people lose interest in this meme stuff, and this goes back to a more reasonable valuation. And paying $2 for I basically paid an average of $2.03 for a potentially spread worth $10. So that would be a great winner if sometime after earnings this starts to slowly move back down towards $100. We'll see what happens, but in the meantime, I will cover these calls. And there are ways for me to take a similar amount of risk without having actual naked calls, right? Or let me say to have similar Greeks without having that actual naked option exposure. So that's where we are right now. Stay tuned for the next exciting installment of Trading with Dave. What was your return last year? I lost money last year, actually. Not much, but I ended up losing a little bit of money last year. I'm very inconsistent in my trading. I've had some years where I'm making 100%. Other years I'm losing money. My P&L has always been very volatile. I'm up a lot of money lifetime, but my P&L has always been very volatile. So that's why I'm not a good example to necessarily follow my exact trades. Might be an interesting person to discuss stuff with, but I would not follow my exact trades because my P&L is very volatile. Anyways, thanks everybody for checking in with me. I will, but the good thing about me is that I do tell the truth, and the truth is trading is hard. Thanks for watching, and I will see you next time with the next installment of Crazy GME.